Director CEO live with us at this point with regard to Bandhan Bank. Stock price up 4.5%. Great having you, sir. First, give us a perspective. The slippages have fallen, and that is obviously positive news. The markets are taking it well. 18% sequential downtick in terms of fresh slippages. Talk to us about how the book is behaving.
First of all, good morning.
Wishing a very good morning.
The slippages, definitely, it's a very good positive indication that the slippages have falling, and it is mostly falling in our EB book, which we call as more popularly as the microfinance book. So if you look at the total slippages, which has come down almost 200, out of which almost close to 200 crores lesser slippages have come from the EB book. So since that book is growing up, and compared to the other books like in retail, housing, or wholesale banking, the slippages are more or less contained. So we expect that there will be a continuing improved trend in the coming months. And we hope that this will definitely give much more resilience and much more strength to our balance sheet.
And it should reflect, Mr. Pratim, it should reflect pretty much immediately. Would it reflect in Q4 itself?
Yes, definitely. It has already started giving a positive effect into our balance sheets. It will be also reflected in Q4 and hopefully in the next 2 quarters also.
Talk to us about what the journey of the bank therefore looks like in FY27 and Q4 as well. You've already started the growth engine to some extent. 4% sequential was strong. Will you likely sustain that? Are there any hiccups in any form that you're seeing?
So you see that strategically, when I joined, we said that we will now be doing a more balanced business rather than depending only one market segment, that is the microfinance. We have learned a lot of lessons from the corona, and also this segment is vulnerable to climate and other risks. So we decided that as a universal bank, I should spread my assets, and we continue to give emphasis on the secured books. Today, if you see, my secured book is 57.3%, and unsecured book has come to 43%. And a year ago, it was just the reverse. The secured book was 48%, and the unsecured book was 52%. So we have taken a very strategic decision, and we thought that by the end of financial year 27, probably we could be achieving a ratio of what we have achieved just now. So we have, I would say, pre-achieved our target. And now we're in a clear-cut position to grow secularly in the same proportion across all segments. So going forward, the strategy remains very clear. We will grow in the EB book also. We have been degrowing so long. So this balance sheet also, you have seen that the book has degrown, but this is because of the ARC sale of 3,200 crores. If you take that factor into account, the EB book has also grown by 1,100 crores. So the trend is now very positive to the growth of advances. We will maintain the same rate of growth in the current quarter.
Mr. Pratim, that sounds very optimistic. I also want to ask you and get your outlook on your credit costs. A nominal improvement this time around for credit costs. Is this expected to sustain in the next, let's say in the near to medium term as well?
Absolutely. So with the slippages coming down, my loan loss provisioning will also go down, and that will give definitely a much more positive impact. And I expect that we will see the results coming in the Q4 also. It will be reflected.
Okay, and your outlook, Mr. Pratim, on asset quality, very sharp improvement this time around on both your GNPA and NNPA. Talk to us about the outlook.
Yes, so it was another strategic decision we take because we were carrying some of the legacy books in our microfinance or the EB segment right from the days of Corona. So we decided that, yes, we should make a sale to the ARCs, and that sale has been done, and it was quite a good sale we have made. And that has reduced my NPAs drastically, and it has now come to a much respectable level at 3.3%. You have to understand that we are still having 35% of our exposure in the microfinance book, which is not there in any other universal bank. So it is quite a different. For us, the slippages, if you look at the industry, is much higher than what we have done in this particular segment. So I can say that definite green shoots are being seen in the overall credit cost scenario, and with the lowering of the loan loss provisions, it will definitely improve.
Mr. Pratim, if I were to try and understand how loan to deposit ratio will evolve for you, you're obviously curtailing bulk deposits as a chunk of the total deposit base, and it's higher cost and therefore should be margin accretive for you. I will talk about margins in just a minute, but just talk to us about how you see the deposit growth trajectory versus loan growth and whether it will curtail loan growth for you.
If you just look at our interest rate history, I would say we have been an outlier in the interest space. In some of the buckets, we were giving almost 1%, 1.5% more than the other banks were giving. We have moderated this. Definitely, we have moderated this. And so there has been some effect of this moderation. But the good thing is that I have grown in current account. I have grown in the granular core savings bank deposits. Yes, I have lost some chunky deposits which were from the institutions in the high-end segment of the savings bank bucket. But that is overall, I would say, if you look at the cost, it is turning out to be beneficial. Earlier, the focus was somehow to manage the liquidity or also to manage the target through the bulk deposits. We have strategically taken steps to stop it and focus only on the retail segment. So our retail deposits have gone up to 72%, which is very good improvement if you compare to the last year, which was around 67%. And our focus on the bulk deposits would be also further reduced. But depending on the liquidity, we will see that how much we will take, but it will be taken only for managing our liquidity.
Okay. Also, sir, talk to us about your outlook on NIMs. We understand that your term deposit repricing is going to be taking place in Q4. So what could be the impact on NIMs? And on the flip side, you've also spoken to us about the share between the secured and unsecured book. Talk to us about how all of that plays out for your NIMs going ahead.
So again, historically, we have been a bank who was having a very high NIM, which is also not in the universal banking segment. That is because we were dependent much on the unsecured loans and also on the microfinance book where the interest rate is comparatively higher. But we have also faced the consequences of it. And one, Corona has taught us many lessons. And then afterwards also, we have seen some setbacks happening in this industry. So we decided to actually balance our books. So in the earlier, also when I have talked to all the investors and you all, I have clearly given indication that this change in the strategy will definitely going to lower our interest income and lower the NIM. It is quite natural. The NIM was further affected because of the upfronting of the rate cut, which we were not expecting. So we were expecting maybe 25 basis points in each quarter and we can manage the NIM. But suddenly a 75 basis point rate cut affecting our balance sheet has definitely had a negative impact on our NIM. And in September, you have seen that our NIM has gone down almost to 5.2%. But again, from that area, if you look at this quarter, our NIM is at 5.9%, which is quite respectable. We have given a guidance of around 6% by the end of financial year 27. As you have rightly said, that the effect of moderation of interest in the term deposits will mostly come through in this quarter, in the month of March, when the fixed deposits at the earlier higher rates are getting matured and would be rolled into the new lower rates. So that will definitely give a positive impact. But we have to also take into fact the consideration that RBI has further lowered the repo rate by 25 basis points. So that will also have an adverse impact in my NIM. Overall, I am saying that both these things will be balanced and will be able to maintain the same level of NIM around 5.9 to 6% in this quarter. That is, of course, our...
Right. Mr. Parthal, quick last question. So 150 to 160 basis point improvement in credit cost, that's the real change, right, within the ROA tree. That will likely lead to you clocking a 1% plus ROA FY27. Is that something we can pencil in?
No, I think we have given a much higher guidance. We were trying to achieve around 1.7, 1.8. But when maybe we will be near to it. I don't know. We have to just revisit our guidance after the results, this quarter results. So after we totally review our annual results, so it may be needed, but we will just look into it. But as of now, my aim to get an ROA of 1.67% is there, because still I am having almost 33 to 35% of the books in the unsecured microfinance segment. And if that segment performs well, where the interest rate is higher, I think that we'll be able to reduce our credit costs and we'll be able to improve our ROA substantially and going near to our guidance.
Okay. Thank you so much, Mr. Partha, for coming in and speaking with us. It's been great getting this perspective, of course, and wishing you all the very best going forward. Likely a bottom is what is getting signaled in by the Managing Director, CEO of Bandhan Bank. Thanks so much for speaking with us, and completely out of time, viewers, on this